What's going on, guys? Welcome back to the channel. In this video here, we're doing an analysis on Cummins Inc. Ticker symbol CMI. Now, this was recommended by a buddy of mine, Marquise, who runs the Red Cliff Investor channel. Check him out. It's in the description box below. He does amazing fundamental analysis videos, so give him a watch. So loading this up in the stock research tool, we're going to go through our three different categories here, which are company metrics, which compares the 5-year averages to the trailing 12 months, our financial valuations, which grades the cash flow statements, income statements, and balance sheets, and last but not least, we will go at our price analysis section, which will find the intrinsic value of this business. So with Cummins, right off the bat, just on this screen here, my stock spec screen, we've been on a little bit of a price decrease, as we can clearly see, from our high from 52-week range being 247.48 down to a low of 184.28. Currently, at the time of recording this video, we are sitting at 205.20. I'm liking this. I'm liking all the green here, but we'll get to that in a second. Going through our company metrics, what I want to do here is scan for anything that's kind of, out of the ordinary or some improvement. With our PE, we have been decreasing our PE ratio from 14. We went from 17.70 down to 14.74, which is great. I like a low PE, but it's also comforting to know that the PE ratio on average has been extremely low. It's been underneath that 22.5. EPS very high for a business like this, 13.78. On average, it's been 12.04. So it's up. Profit return on equity is slightly up, but it's also very high. And profit margin is still hovering around that 8%. So they've been pretty consistent over the last 5 years. And currently the trailing 12 months, they haven't really budged. Everything's kind of been consistent, which I don't mind. I like that. Our current revenue is sitting at $24.31 billion. Free cash flow is sitting at $1.28 billion. That's all right. But our average free cash flow comes out to be 1.9. So currently it's a little bit less, but that's obviously the trailing 12 months, so don't need to be concerned just yet. The one thing, though, that is standing out to me, and that is a potential problem, is the dividends being paid out. We currently pay out a 2.83% yield on our dividends, but in regards to what dividends are being paid out, $800 million of our free cash flow is being allocated towards these dividends. I don't know if I like that, folks, considering that leaves us pretty much with just another essentially $1 billion left over to continue operations. But just from a numerics perspective, I don't like when so much of our free cash flow is being burned towards dividends. That's something that's a little bit of a red flag. Our return on invested capital is phenomenal, sitting around the same place as our 5-year average, so decreased slightly. With Cummins, we have a very high Allman Z-score sitting at 3.71. We want to see this number over 3, folks, so we have that, no problem. And our Pierce Trostic score is sitting between that 7 and 9 range. 9 is the highest score you could possibly get, and 7 is a fairly decent score. I don't have time to really go through all the different categories, but if you look up the Pierce Trostic score, it pretty much grades performance of the business from almost like a year-to-year basis. So 7 and 9, it's a pretty decent score. Jumping into the financial valuations, folks. Now, this section of my software here takes a look at the company's cash flow statements, the income statements, as well as the balance sheets, and grades it out of 10. And with Cummins Inc., we have a fairly high score sitting at 9 out of 10. So we're going to go through those 10 categories right now. And the only thing that's really sticking out to me is our 5-year free cash flow growth. And that's pretty important, but it's down. It's down. So we can go up here and we'll go to the cash flow statement and we will see what the story is. So free cash flow is down a little bit, okay. And now I believe, I know Marquise and I were talking about this business not too long ago, but I believe they made an acquisition, and that is probably right there, purchase of investment of another, I forget, another company. He was telling me, and I can't remember, but he was giving me a heads up, hey, the free cash flow went down because they made an acquisition of a business. So that is what that is. So that's why it's down. No problem. So as long as I know where that free cash flow is, if it's being invested, we'll see how that plays out in the next couple of years, but I'm not too concerned about that. Everything else, though, is looking great. We got green across the board. We have a very low PE ratio, a decent current ratio sitting at 1.68, a high return on equity. EPS growth has been phenomenal, as we can clearly see. Huge percentage increase there. Debt to equity is underneath that 50% mark, folks. So first 5 categories have been looking pretty sweet. On the other side, we are not diluting shares. We are actually buying back shares by decreasing it almost by 5%, which is great. Net income has been increasing by an incredible amount. Let's go and take a look at what that actually looks like. And our net income, you can see here, we dipped a little bit in 2017 here, but take a look at that, guys. It's been up. It's been a little bit of a bumpy ride, but you know what? We went from almost 1 billion, now we're at 2 billion. So pretty good upswing there. Return on equity is high. We want to see that number over 10%, 10% or higher, folks, and we have that no problem. And our revenue growth is going up. So Cummins is doing a lot of things right. The only thing that they're getting dinged for here is their free cash flow, but we know that they've bought and acquired a business. So we'll see if that future investment pays off later down the line, or else this might be potentially a 10 out of 10 stock, which is great. Now, from the company metrics category, everything's been pretty consistent. Financial valuations is looking extremely strong. I have a price decrease on this company. So these are all things that are checking off a lot of boxes for me personally. I like when a company is strong financially and the price is going down, because that may open up an opportunity for us to go in and buy this business at a reasonable price. In order to find that out, though, we're going to do a price analysis in my software here. We're going to do a 10-year evaluation. So I'm going to set this to 10. I'm going to fill out these boxes here using the previous numbers that we've shown from a historic basis, and we'll touch base with that in just a quick second, so stand by. So folks, before we jump into this, hit that like button, hit the subscribe button if you've been enjoying the video thus far. This software I have in front of me is going to be available to you, my viewers and subscribers, and if you want to see the stock and analyzed, write it down in the comment section down below. If you're new to the channel, I like to be as conservative as possible to give myself the most margin of safety. That's the name of the game, folks. We want to give ourselves the most margin of safety as possible, so we're buying these businesses at quality prices. So with Cummins, I decided to give myself a haircut with the revenue growth. So I did 3, 4, and 4.5, right, to kind of reflect what we have here in the 10-year and 5-year numbers. And everything else, I pretty much kept the same of numbers that I know that they could potentially hit, with the profit margin going 7, 7.5, and 8, free cash flow going 6, 7, and 8, based off what they've shown historically. Now, from the price to free cash flow, because they've been showing us 22.83, I decided to keep it underneath 20, and now this may be a little bit too much of a haircut, but I did 12, 14, and 16, and our PE ratio, I hovered around that 14 mark by going 10, 12, and 14, with a desired return of 13%. We're going to click calculate. So here is what we got. Average current price is 205.20. Our average calculation comes out to be 180.66. Now on our aggressive run right here, we're sitting at $233. $233 if you believe it's going to grow by 4.5%, and the PE ratio is going to still stick at 14. Now look, our average currently it's at 14 right now, and our average PE ratio is at 17. It very well could hit all these numerics. It's green across the board here, and our moderate is sitting at 180. I feel like this is the happy medium here. And look, folks, it's nothing uncommon because we hit that number right there. We hit 180 in the last 52 weeks. Try to find it on this chart. I'm not going to even bother, but we hit it. We hit it in our last 52 weeks. We went down to 184, so it would have been a decent time to pick it up at that price. But my numbers here may be a little bit too conservative in terms of revenue growth. I think maybe 3 might be cutting it a little bit. But look, if it's around this 180 price range, I think you're giving yourself a decent margin of safety, and it would be a company to pick up. As strong financially as it is, it just makes sense. Now, does that mean you go out and buy it once it hits that 180? No, there's still a lot more work to do. This software here that I have in front of me allows me to just screen these companies more quickly and efficiently, so I can kind of get a general understanding of where the company lies. So there's also other tools here, like I have the news section here that I've looked before actually just doing this video, just to see where they're where they're currently standing in terms of what's going on. But as well as if I want to see everything a little bit more visually, I have my charts section just to give myself, a better idea of where everything is going and how it's performing against SPY and all the top institutional holders. There's more features and more tools along the way, folks, so if you like the software, stay tuned. It's going to come out. But yeah, Marquise, this one goes out to you, buddy. So Cummins, I think it's a fairly solid business. I think I'm going to do a lot more research on this business and see on the CEO team of what they have planned and what's going on. As we move into EV vehicles, I don't think like this company is going to affect it too much, because EV will be on the commercial side of vehicles, on the consumer side, like all your cars and stuff like that. But the heavy machinery, I believe there will be gas powered engines gas and diesel powered engines for a long time. So I don't see this business going away. Financially, they are in a very good spot. The only problem I have with this business, and I mentioned it earlier, is the dividends being paid out. That's the one thing. Yeah, that's the only like red flag. We'll see how this free cash flow acquisition that came out. I don't remember the name of the company. Marquise, if you want to drop a comment down below, and I mean, I'll probably figure I'll put it in there too. But he knows what they acquired. But yeah, the dividends being paid out, I think that is just an issue, just because it's so much of the free cash flow is being allocated towards that. But I think they're in good standing, as well as we go into a recession. I think they'll be able to last. They have longevity. This is a company that's been around since 1919, so they've gone through a lot. They've gone through 2 world wars. They've gone through a lot of economic recessions. I am fairly confident in this business to perform well. Anyways, folks, that is the evaluation on Cummins. Currently, average calculation comes out to be 180. The aggressive average is being favorable at 233. So if you believe these numbers, folks, it's a buy. But there's still more research to be done, and make sure you do your due diligence. Let me know what company you want to see evaluated. Write it down below. I will see you in the next video. Thank you so much for watching.